Morning, folks. It's a Sunday morning here in the UK, 29th of March. It's just after 9:30, and we're looking at a chart of crude oil here. This is a long-term monthly chart going back 30 years on crude oil. What you do when you see these huge sell-offs or massive rallies, what you have to do is you have to come back to your long-term time frame to put things into perspective for you, if you like, so you can see the bigger picture of what's going on. And if you look back here, we had a sort of a consolidation area over here that took best part of 9 years to complete, and then we had a rally, then we took off, and now we're sort of backing off, and you can see what's happening now. Crude oil demand has dropped through the floor because of obviously everything that's using crude oil around the world is starting to slow appreciably. Air flights cancelled, everything that uses crude oil. So you're seeing the obviously demand's fallen, so obviously price has fallen in line with demand, doesn't it? So from a technical, this is an area now where you need to be putting the technicals and the fundamentals together, because looking how this virus is panning out, it's looking to me like the first economy likely to start to recover will be China, or where the virus first started. That'd be logical. So you'd keep an eye on if the Chinese economy starts to recover, and then we should start to see a reversal in commodities, crude oil being one of them. Now, on a technical perspective, it's looking like we want to get down to this 1.27, which is going to take crude oil down to about $12 a barrel, 12, that sort of area. It's hit the 1.128, that's 1.27 of this last rally that we did here. This was an ABCD rally. Well, it was quite a big ABCD rally. This is a monthly chart, but it don't look so big when you put it in context of the last 30 years, does it? But that's what we'll be looking for. If you come down to a 4-hour chart, we can see that several other little patterns complete right in that same area at $12. You've got an ABCD off this last swing high. We gap down. If you remember, 9th of March, gap down. All we could do were a little, I think we were 382 off that. And then we've come down. That'll complete a 3 drives to a bottom pattern in that area as well off this 4-hour. There's your drive 1, drive 2, and drive 3 will come in somewhere down there. That's my guess. You scroll it along a little bit. That's going to take you somewhere in that area. The 1.618 expansion on that CD leg of this ABCD will also come in round about there. So the I'm looking at this, it's saying it has made a second higher low. The only thing that bothers me about this is the fact that it's closed lower. These were spike low and a bit of a bounce, another spike low, a smaller bounce. This is closed lower. This candle's closed lower than either of these two over here. So that, to me, that's I won't be a buyer of this yet. Definitely not. So it's looking to me like we're heading down towards this $12 or that sort of area. And keep a close eye on that. And then when you put that in conjunction with some economies starting to recover a little bit, it's just a case of placing yourself into a position to take advantage of the price when it does recover. So, okay, so that's what I'm seeing in the crude oil. That's the update for now. I'll update on the two currencies. We looked at the pound dollar and we looked at Euro CAD. Euro CAD hasn't pulled back to where I was hoping it would, and now there's pound dollar. Pound dollar just kept going. So I'll have a look at them in a minute. So take care and enjoy the rest of your weekend, and speak to you in a minute. Bye for now.